Hey everybody, welcome to Trading Capital's daily analysis video. It is May 13th here on this Friday, wrapping up the week. What a crazy end to the week. After continued selling all week long, we finally had the reversal start yesterday with continued gap up move. Today, you can see here was the open, gapped up pre-market on the open, a little bit of pre-market trading. When the markets finally opened, it retraced back here to the original trend line that we had as resistance here at this pivot high, another pivot high, and right into your gap. And then once it hit that support zone, this is support. Once it hit the support trend line, the markets never looked back and continued ripping. And this was the real thing that we kept an eye on an intraday basis. Once you put in this topping tail right into resistance, you can see that there's a previous tail here, and there was a previous gap fill zone which you filled on this zone. So there were tons of resistance in this zone, and naturally on a big move, especially a gap up, you're going to have some sort of consolidation period, and it's likely that this consolidation period now needs to go down to fill this gap before it can come up here to fill this gap. And it's kind of like two magnets, pulling in the opposite direction. And which one's going to take hold? Well, since the overall macro trend, the bigger pattern at play is a downtrend in the markets, it does favor that we see the move back down to this gap before we head up to the one to fill there. And one of the reasons I think we see that is because you have this topping tail, we've seen the sell pressure, you rallied up again trying to take out that high, but you failed. And now you're putting in a little bit of this bearish intraday consolidation. And it does favor a move down. You will have support at this 395, but I do think the support that you hit is, let me just erase that line. The support that you hit on the chart most likely is going to coincide with hitting this trend line, the previous trend line here. It was your breakout trend line, and this is your retrace back to the original breakout zone. And it just may coincide with on Monday you fill this gap as well as hit this trend line. I think that will be a key technical gap. If you haven't gone long on this market yet, you may get one last opportunity to do so, and then you do have that defined stop over here that you can trade against in the event that the trade could go against you. So since you have this defined low now on a daily chart, it gives us a great area to now trade against on a daily and weekly and intraday basis. So you did not put in a bottoming tail on the spiders, but what we will notice is that when we take you through the other charts, you did put in multiple weekly bottoming tails across many of the sectors. So taking a look at Netflix is really interesting. Strong price action. It's finally had some buying pressure underneath it, and you're starting to really see it turn. On a daily chart, you've had a substantial increase in volume, which negates many of these sessions all the way up until here, this candle. So it does show there's now some convincing buying pressure going on. The upside potential I see for Netflix is all the way to this gap window, the 245 area. I think that's going to be the line in the sand. Whether it gets there on this cycle, it's hard to know that yet. I do think it has a strong shot and probability of getting there if the S&P 500 can continue to rally up to its potential maximum resistance. So it will need help of the market. Everything is a market trade moving forward, but some stocks will move since they are a lot more oversold in the market. The beautiful thing about Netflix, you've put in this weekly bottoming tail, closed inside of this red candle here, and you closed higher than the previous weekly closing low price. So it's beautiful to see. You have the large wick, and it's confirmed by a larger volume candle than your previous weekly candle. So that is key. When not only sometimes you see weekly bottoming or daily bottoming tails, but they're not confirmed with an increase in volume from the previous candle. This we have the confirmation, just slightly, but it's there on a technical basis and just a small nuance to observe. It just increases the probability that we have a defined low now. And the interesting thing is, let's flip back to the daily. Actually, we'll keep it on the weekly. It's easier to analyze because you can see it in one screen. So when we flip onto the daily, you have this weekly bottoming tail. The last time we saw this weekly bottoming tail was this candle over here. Okay? So this was another weekly reversal signal. And the importance of identifying this is your debacle into earnings. This was your earnings bar that gapped lower, had this massive sell-off on just not even bad earnings, but weak forward guidance in terms of losing subscribers from Russia and around 2 million from around the world. But nonetheless, people freaked out, panicked, and you also got that sell-off here, in your previous earnings where they gave that bad forward guidance. This, they kind of said they were losing some subscribers, but this is they really confirmed a number of the 2.7 million potential loss in subscribers, and that's only 1% of their subscriber base. So does really a panic sell of in one fell swoop, of at the low 53% really justify a 50? Does a 1% subscriber loss justify a 53% sell-off from the last earnings report? And really, does it justify Netflix being down at the lows 76% from the highs? That's an incredible buying opportunity. The fact that we've taken out the COVID low, we've taken out the 19 low, we took out the 2018 interest rate hike cycle low, we've now taken out the 27 low. That is incredible. The company has way more revenue, has way more profit, has way more subscribers, has way more content, has way more experience as a business. And look at the level we're owning Netflix at. That is just incredible, people. Truly, truly incredible. The power of these bear market sell-offs, and that's the importance of having cash. But back to this candle formation here on a weekly chart. This is the week that we had Bill Ackman announce. And let's just flip to the daily, actually. Bill Ackman announced on this day his fund was taking a $1.1 billion stake in Netflix. And then the following day, it gapped up on that news and closed a whole 10%, just over 10% higher. And you got a follow-through candle to take it up 18% on the news, just from that one move. And here, the full measured move from the low is 30%. So here you had Bill Ackman and his fund acquiring in this zone here. And then you had the news and the retail traders pile in and push the price up even higher. So that's what could transpire here. Now that you've been beaten down, you've put in the reversal candle, we could hear some sort of news or announcement, either a massive fund buying or taking a position in Netflix, or some sort of positive news announcement from Netflix itself. So we're certainly positioned to benefit from an increased spike in Netflix. I do think there's a strong possibility that we do hear some sort of positive announcement on Netflix. PayPal had a decent move off the lows. We did not get a bottoming tail, but you did get an increased spike in volume. The only concerning thing is you do have this gap up on an intraday and daily basis. Nonetheless, PayPal is one of those things that are so oversold, and I think it's faced more downside pressure than most because it's also been tied to the crypto industry. Bitcoin and basically the stable coin UST and Luna has had a massive debacle over recent days, putting tremendous liquidity pressure and issues on the overall crypto industry. And when you factor in the amount of wealth that has been destroyed from the crypto industry, it is, I think it's roughly 1.7 trillion. The high in the market cap of the total crypto industry was about 3.1 trillion. And it's funny because the .com crash was around 2.7 trillion. So very close in valuation. And now that the crypto industry is deflating, I think it's brought that valuation down into the 1.5 trillion or maybe even 1 trillion area. So it's had a substantial correction. And that's why PayPal's business model and profits and revenue streams are also partly tied to the crypto industry as a payment and a major, I think, a buyer and a withdrawer of Bitcoin. Basically, you can hold a Bitcoin wallet with PayPal. So obviously, if there's less transactions happening in the crypto because of liquidity, PayPal naturally has a thing. But I think Bitcoin's into major support. The debacle with Luna is behind us. We all know the coin's done. And it's certainly time for PayPal to start rallying. I think PayPal can rally up to this at least this 92 area. If the markets catch a wicked fundamental move, it could really rally up to this 107 area. Looking at Palantir, we're still riding our Palantir up. We are deep in the money on our trade. I believe, let me just double check that we make sure I didn't sell Palantir. Oh no, we did sell our Palantir. Excuse me, we did sell our Palantir. So we'll skip Palantir here for now. Another one that we can look at is, let's look at STNE. So STNE is one of my favorite ones, Ryan. Let's flip to the weekly right off the bat. Weekly basis. So let me take care of these lines. Weekly basis right off the bat, you have this weekly bottoming tail. Amazing to see considering that this stock at the lows, was down 92%, and now it's down 90%. So it's completely still oversold for this stock. And Stne gives us our emerging market Brazilian exposure. So it's just a way to diversify outside of US equities. And I think this stock is well positioned to have a big move. It could have potentially a double up move in a very short period of time. I would not be surprised if that happened. Now, will I stay in for the full 100% move if that happened? Probably not. But I'm just saying, for those more aggressive traders and take a little bit more of a riskier approach, you can certainly stay in it for a little bit longer than I'm prepared to. Weekly bottoming tail confirmed. Not only is it confirmed, but you confirmed it with volume. And the way you confirmed it is truly, truly amazing and so interesting to me, because you had your initial sell-off on a weekly basis, and then you pushed back up. And what's so interesting is that when you analyze this move here, this huge green candle was on the back of earnings. They missed on earnings, they beat revenue, but I guess the markets liked their report and the valuation was sweet enough to justify what they were earning. And it gapped up 30%. I mean, if we flip to the daily chart, you can see this massive gap up 30%. So when you have a substantial volume bar, a standout volume candle that really you haven't had before, then it stands to suggest that this was the most amount of shares that have ever traded in STONECO's history. This is a highly probable signal that this is the standout capitulation low in the charts. So that is very important to observe and understand. And not only is it on a weekly basis, but when you flip to on a daily basis, when you flip to a weekly basis, it is also the standout capitulation volume bar on a weekly basis. So what's interesting about this price action is people that got thrown out of this trade because it broke this pivot low, and that's what happens. The institutions play games. They know people don't wait for a daily or weekly confirmation before they get in or get out of a trade. And had you not waited and got flushed out, you would now be down on your trade. You would have taken a loss, and you're missing potentially one of the biggest bounces in STONECO's history that it could experience. So I certainly think we have a potential to make a solid 50% on this. The natural first resistance level that I see, the major resistance, is the 17 mark. Due to the fact that it's so oversold, this stock with market fundamentals could bounce all the way up to the 17 mark. That would be a 114% gain. Even with a 114% rally, the stock would still be down 81% from the highs. That is just phenomenal to understand how the integers work and how powerful these bear market percentage bounces are. If we take a look at Spotify is another one I'm just loving right now. There's so many companies I'm loving. They're so much cheaper. We're completely Spotify. Weekly bottoming tail, check. Volume, check. And the cool thing about Spotify is we're up now already on the trade, a whole just over 10% on the trade. You do have a daily gap fill that you could come and test. Ultimately, I think Spotify is so oversold. They're one of the companies that have a very, very low overhead in terms of operating costs. They have an easy subscription base to forecast revenue from. It's those micro subscriptions that people often forget to cancel, even if they're not using the service. And it's music. People love their music. They have a well built up content. You know, they have Joe Rogan as a huge influencer for Spotify. It's extremely, extremely oversold. Their earnings were good. You know, they've beat on all their last earnings report, and their stock is down 76% from the highs. Just an amazing buying opportunity when they have, you know, when you're trading at levels below the IPO price in 2018, even though they're earning more revenue, they're earning more profit, they have less debt, they have more content, they have more subscribers, and they have more experience operating this business. And we're trading below the IPO levels. We're trading at the lowest levels in Spotify history, and we are now an owner of this stock at the lowest levels in Spotify history. It stands to suggest that these lows that the charts are putting in could be the standout lows. We could come back down and test these lows, like double bottom areas, as the bigger cap techs continue to fall. But it's really phenomenal to know that we are positioned in most companies where they're down 70, 80, 90+% from the highs. Truly, truly incredible. Another one I look at, another one I love right now, Teladoc. TDOC. We've been accumulating this, and we're going to be profiting handsomely from this trade. We're already in the money. Again, a beautiful 10%. So notice how we took a lot of trades off the table, but we left quite a bit of longs on. I mean, we still have our Netflix, we still have our TDOC, we still have our Teladoc, we still have our firm shorts. In terms of other longs, we still have our bigger cap tech plays like Amazon and Apple. We still have Canopy Growth, which we're in the money on. We have some financial exposure. We have some gold, our healthcare. So we're well diversified in terms of a variety of sectors. Lyft is another one that's performing, but just analyzing Teladoc here, what is this? Boom. That's right. It's a weekly topping tail. Teladoc, 91% from the lows. Now you've put in a substantial low. Teladoc too, when you look at where we're trading at, below IPO levels. And now we own the stock around the IPO levels. When Teladoc has massive amounts of more revenue, yes, they've made some pretty poor acquisitions, but now I think at these valuations, they are a potential acquisition target for anybody looking to get some health exposure into the health sector. I truly think their business model is going to stick around and keep adding value towards people that need it, but it's certainly an opportunity to be acquired by a larger company. And where I'm looking to potentially sell Teladoc, I think you can easily get back to this gap fill 30 or the gap window around the 39.40 area. But another one that I'm looking at is right around here. You have this major pivot, which was your COVID low at around the 42.38 mark. Now that's partially into the gap, but I think that's your ultimate max upside resistance before the next down leg starts in the markets. But if for some reason it gets up to that, that's an extra 37% in our pocket. Now I'm looking to probably offload around these pivots just to take my profits and run, as the risk to reward is going to tighten in favor of more risk. Let's take a look at, let me just scan through the list. We've been through Netflix, Spotify, STONECO. Oh yeah, Twitter. Let's look at Twitter. So you'll be happy to know we now own Twitter as well. So go Team Elon. We're supporting Elon's cause. Actually, one of the reasons why Twitter was down today, and it's a very suspect reason, is Elon came out with the announcement saying that the buy decision of Twitter is now been paused, put on hold, due to the fact of potential more estimated spam accounts and robotic accounts, essentially fake accounts that aren't people, and people are where the real revenue is at because you can now mine their data, sell ads, targeted ads, etc., etc. But needless to say, Twitter gap down on the news, was down over 10% on the day. We picked it up pre-market around just above $40. We are slightly in the money. The fact that Twitter is now down 25% from the highs of the deal, it really makes me suspicious. I think Elon is going to offer potentially a lower price, buyout price, but he also could potentially offer the same share price, but he could be acquiring a larger position right now as we speak. So essentially what happened a few weeks ago is the poison pill was almost enacted, and Vanguard was not in a way forced, but Vanguard was kind of coerced by the Twitter board to now become a bigger shareholder than Elon. So that forced them to buy a few more extra billion at a higher share price. And now since the stock is down basically 25%, I think it's down 20% from where Vanguard must have bought more, it stands to suggest that Elon could now be upping his position in Twitter as we speak, buying more stock at these levels, at these lower levels, 38, 40, and so on and so forth, because that's lower than 54.20. When you look at where Twitter has traded, there was always this nasty technical gap that was on the charts before the buyout. And usually buyouts, you do get that gap up move, but Twitter stock was not acting the way it should have been. When you have a buyout price announced at 54.20, and there's a previous video on our channel from a few weeks ago, when you have a buyout price, the price usually just stays on this line. and treads back and forth. A very tight range, doesn't go up, doesn't go down too much from the range. But Twitter had some amazing volatility after the buyout, which is what made us suspicious of the deal, which is why we didn't buy up here. A lot of retail traders piled in thinking that they're going to just make a guaranteed, few percent on the trade, even up here, 15, 16, 17%. But now, the fact that you're down, we own the stock 25.6% down, and you did almost fill this technical gap. You could come down a little bit more, but now you have a massive gap to the upside, which looks like it needs to be filled, which will put us in the money on the trade once a potential deal is announced. And I don't think the deal, we're going to have an announcement, over the weekend on Monday that's going to potentially send the stock lower. I don't think Elon's going to walk away from the deal. I do think he still wants to acquire Twitter, but I think he's doing it at a way that he's potentially saving a few billions. Imagine Elon's acquiring down here on these massive volume spikes, and now he's buying and increasing his potential ownership from, I think it was 9%, potentially now to say 12% or 13%, or just whatever Vanguard has is matching. So if he's buying, say, 3% more Twitter stock, or even 2% more Twitter stock, 2% or 3% on a $44 billion deal is a huge amount of money in his pocket just by playing the game better and being a little more strategic. And let's face it, he is deemed one of the smartest people in the world, and he has an amazing team behind him. So they could be potentially playing chess while Twitter's playing checkers. So we'll just have to see the outcome, but I'm comfortable holding Twitter now at 40 with potentially Elon still buying it at 54.20. I just think he won't need to buy as many shares. That's kind of the play that I'm leaning towards, where he may not have to give them 44 billion anymore because he owns a few more extra percentage of shares. He may just have to give them, say, 35 billion or 40 billion. However, he may be saving a few billion on the deal. I think that's going to wrap it up for us today. I'm just going to do one final scan through. Nope, I think we're good. So again, enjoy the weekend. This week was crazy. Sometimes you just need to kick back and relax between the volatility in the stock market and the crazy chaos in the crypto market. It's just been a wild session, and this is why we live for these days as traders and swing traders, but it does certainly take a lot out of your psyche and emotion, and the weekends are this good amount of downtime. Even though crypto is still going and I briefly monitor it, it generally will stabilize over the weekend while the main liquidity from the stock market and bond market is closed. So hopefully everybody can enjoy the beautiful weather, or at least I'm experiencing beautiful weather, and really enjoy the weekend ahead and refresh for another week on Monday.